Really, if we think about the overall context of where things are going, the research consistently proves that investors do worsen home affordability unless supply restrictions are loosed and demand is balanced. That is the problem that we're having right now. Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow. Well, unless you've been hiding under, a bridge or a vacant home, or something like that, you've probably noticed that the last couple of years have been really unkind to real estate investors. Now, I'm not just saying just generally unkind, I'm saying completely full-on onslaught from the government and the general uninformed public to suggest that real estate investors are the worst thing to come since, well, there's a lot of things you can think of right now, and I won't say any of them. With all that being said, real estate investors have taken a beating the last couple of years, yet they keep coming back for more. And as a real estate investor myself, I start to wonder, does it still make sense to invest in Canadian real estate? Does it? I mean, if you think about all the changes that have occurred in the last number of years, from the taxes to the regulations to the guidelines to the tenancy rules, you start to ask yourself a question. Does it still make sense to invest in a Canadian real estate, and whether you're someone who does invest or someone who doesn't? Now, I'm of the mind that there's a yes and a no answer to this question, and it depends on your outlook. For this actual podcast episode today, I'm going to focus my energy on an overarching number of changes that have occurred in the last number of years that are essentially trying to force the real estate investor to being the bad guy and exiting the industry as a whole. Now, this is somewhat inspired by an article that I read. However, I actually had this podcast in a different form ready to go a few months ago, so I'm excited to deliver this to you. Now, starting off, I think it's no surprise just that Trudeau's government has essentially had it out for investors for the last couple of years, and more or less completely thrown anyone in Canada who doesn't live in their primary and who owns a second property under the bus. And that's been shown true with the most recent feedback that's been provided, the feedback during the pandemonium of 21-22, during the highs of the bidding wars, and so much more. And so I think we just got to start off by asking ourselves the question, what is the definition of real estate investing? Now, for the sake of today's conversation, we're talking specifically about holding real estate for the purposes of personal financial gain. We could talk about diversifying into REITs and other types of private equities like we have in the past, but today, specifically, I'm talking about that. Now, it's the thought process of owning at least a portion. That could be a co-ownership or a whole entire portfolio of properties. Either way, again, for the purpose of financial gain. Now, let's be clear. Real estate investing for financial gain has some benefits. One, you have the appreciation, which we've seen in the last number of years, property values going up. Number two, leverage, which is a big one. We're going to talk about that here today. Leverage, you can leverage your property up to 80% if it's a rental property and 95% if you're living in that particular property and you qualify for it. What other types of assets or asset classes that are investments can you leverage like that? Not many at all, especially with as quick of a turnaround time. Now, overall, as far as real estate investing is concerned, most people getting into it, I would suggest, have a really good idea of some of the risks. So why is this happening? I mean, let's start off. We think about the last 36 months, there have been at least 10 significant changes in regards to guidelines and overall market sentiments that have impacted the market. And I'm going to go through and talk about these different provincial and federal changes that are impacting the real estate investor and of course give a summary of my personal anecdotal summary or feedback of what I've seen so far and how this could impact a real estate investor. Now, at the end of this podcast or YouTube video, whichever you're watching here, I'm going to talk a little bit about what I think is going to happen and where the opportunity is if you're still interested in investing in real estate throughout this entire episode. But let's start off with the juicy stuff right away before we get into it. Let's break down the specific changes that have occurred, the measures viewed as a crackdown by federal and provincial governments, which are aimed basically to curb the speculation and quote unquote ease housing affordability issues. So let's break down specifically what's been introduced. Starting off with number one, provincial speculation flipping taxes. Oh, you probably heard my previous episodes where I talked about this. This only came in early this year. In BC, there is a quote-unquote flipping tax of up to 20% of the value or profit of the new property. And essentially how this works is if you own a property and you sell it for a profit, the first year you're taxed 20% of that profit. 20%. In addition, from years 1 to 2, there's a sliding scale where it goes from basically 20% down to 10% for the remainder of that year, and it's a sliding scale in terms of being taxed. Now that's aimed at the quote-unquote flippers. And I mean, let's be honest here, how many flippers own real estate and hold for more than a year for that matter, 2 years? No one that I know of, not that successful as a flipper. The only people I know that have sold properties in 1 to 2 years are those who did not expect to do so, and there was either a lifestyle change or an opportunity or a devastating fact or something in life that occurred that impacted them and had them in a position where they had to sell. Now, in addition to that, number two is the federal flipping tax. There was a federal flipping tax that was implemented earlier this year, and there's some guidelines that you can go check out online that came into place that were going to impact quote-unquote flippers. So you're going to get it if you're in BC from both provincial and federal. Now, on top of that, we have the capital gains tax. Now, this is a biggie. The capital gains tax is essentially a tax that you're charged on any investment, and we're talking about real estate here specifically, the profit that you earn from real estate. If you own that property personally, you're taxed at 50% for the first $250,000 in profit and 66% for the amount above that. Now, if you own that corporately, like a lot of our clients who are smart, who invest, case in point would be business owners and doctors who understand the tax implications, you're taxed at 66%. So 66% of the profit is eligible to be taxed at your personal tax rate for going forward. It depends on how much you're selling for, but that could be a significant tax against those who own real estate. And I think there's going to be a lot of unforeseen consequences in the real estate market from that perspective, namely people, again, who own and understand how to use a corporation. But in addition, I'm thinking about a lot of families who bought homes 10 or 15 years ago with the purpose of retirement, and their properties, not for no reason or no fault of their own, increased in value, and they had plans in the next 1 to 5 years to cash out and use that as a retirement. Could be a nice smack in the head to them that they were expecting to have a certain amount of cash that they're no longer going to be received. So that's just another policy that's in place. Now, those are some tax implications. Let's talk a little bit about some of the stricter rent control policies. Now, this is a big one. This is massive because at the end of the day, most people that we talk to that buy real estate as an investment, including myself and people that are still doing it to this day right now, have no intentions on being a slumlord landlord. They want to be a good landlord. They want to own real estate and have a fantastic tenant who takes care of their properties, who's going to be paying rent on time, who they can take care of, and vice versa. And so a lot of this is basically the boy who cried wolf, or the people that are getting loud about a few crappy tenant landlord situations and getting their way because the government is standing on this pillar of evil investors. So continuing on, another policy that's been put in place are the caps and regulations on how much money landlords can increase rent. And if you've been following along since 2020, the COVID year, there have been very minimal increases across the board in BC in particular, and not even close to enough to keep up with the increases on property taxes and strata fees notwithstanding mortgage rates and other expenses that any strata unit could be carrying. And so right off the bat, the excessive policies in regards to rental rates have been massive. Notwithstanding the other factors that are coming out right now, we've got a renter's bill of rights, which could be interesting to look at. But we also have in BC new tenant protection programs. Now, some of them I'm all for, but a lot of these are just ridiculous and unnecessary, including the one that requires a landlord upon selling their home now to provide 4 months worth of notice to sell. That causes a complete conundrum, not only to the person that's buying their property, and it devalues them because they can't get a buyer in there for 4 months, but there's a whole bunch of financing considerations. Like if someone's going to get a rate hold to purchase a property, that's for 120 days. That's going to cause some issues there. So it makes their properties less enticing, which is really ridiculous. Now you're basically suggesting that that seller should take less money simply because they had their property as an investment. And truthfully, they're just trying to get out because of all these different issues that are coming into place. Let's keep going down. We've got the vacant homes and underused housing tax. Now, remember, as I work my way through this, these are all changes in the last 3 years. These are taxes that are implemented basically to discourage the holding of empty and underutilized properties. I mean, let's be honest here. How common is this? Because you hear about the odd stories in the newspaper and the media outlets, but this is so rare. I can't say that I've ever seen this occur, or any clients of mine that I've seen this happen. And if someone owns a property outright as a secondary property, why should we be punishing them for having a second home in general? I think that just is comical at best and absolutely ridiculous. Anyways, one more thing that real estate quote-unquote investors who are not doing that anyways, because a smart real estate investor is renting the property in some capacity. Now, here's where things start to really turn my gears, if you will. We've got the elimination of short-term rental deductions, which is the removal of tax deductions for short-term rental related expenses. Are you kidding me? So because you operate a rental, Airbnb, or short-term property, you cannot claim the expenses as your taxes anymore. Not only that, but they've eliminated the ability to do short-term rental properties unless it's your primary residence. I feel like I'm going back to 1984 at this point right now with the way that these rules have come into place. Now, not only is this going to have a really interesting and significant impact on tourism, it's putting all that money back in the hotel pockets. So I guess who is excited about those changes were the hoteliers. Anyways, I feel like I'm getting a little bit negative here, so I'm going to get back on the positive train. As a reminder, these are some of the bans that have come into place, yet landlords that I'm working with and the people that I see on a day-to-day basis who are well prepared are having success still. It's just a matter of where. We're going to go down 2 more, and then we're going to talk a little bit about, or I'm going to talk a little bit about where this anti-investor sentiment came from, what the narrative is, and then again, specifically, what this is going to mean for you if you're interested in investing into real estate. Now, 2 more we've got here. We've got the legislation against single-family home purchases by large corporate investors, which basically means large corporations can no longer or cannot purchase single-family homes in Canada. Well, we've seen companies in the United States buy up neighborhoods, blocks, almost cities at this point, because they're smart. They know that people, A, don't just want to live in condos, and affordable housing is typically condos in Canada. Hey, Mr. Trudeau, not everybody wants to live in a square box. And in addition to that, they're buying them because they know that there's no land that's coming on board anytime soon. We're not making any more land. So this is, in some hands, I suppose, a positive from a perspective of trying to keep it into the mom and pops of the world, or the Canadian citizens trying to buy real estate. But the reality is this is also a situation where it's a pure overstep, because those people are also going to be providing a benefit. Those corporations are going to provide a benefit to people and providing them opportunities to rent, where mom and pops and so forth investors are not going to be able to either afford detached homes to rent out to people or have any interest going forward at this rate. Last but not least, we have a variety of inclusionary zoning policies. And these policies require the inclusion of housing units in new developments, particularly in regions where affordability is an issue, basically suggesting that they're going to provide a requirement for you to have a certain amount of affordability guaranteed in these different housing zones, what that's going to do is that's going to provide developers really less incentive to go into certain neighborhoods and communities to build up properties, knowing that they're going to have a much lower rate of return because they have to stick with these affordability criterias. Therefore, in the long run, reducing the amount of people that are going to build, which is the first problem that we have going on anyways. So as a real estate investor, when you listen to that, you're probably pretty scared. You're like, why would I invest in Canada? Maybe I'm going to head overseas, or maybe I'm going to head down to the US, or maybe I'm going to head down to Mexico and put some money in there. Well, there's some different challenges that you have to look out for in those countries, but you wouldn't be remiss to consider that as one of your other considerations. So the sentiment towards investors has grown completely increasingly negative, influenced obviously partially by politicians and public figures. Let's consider like a few of the big comments or quotes. For example, Trudeau highlighted the issue of homes being used more as investment vehicles by corporations than living spaces by families. First and foremost, this is completely unfounded. Yes, 1 in 6 Canadians apparently owns a second property, but to suggest that more Canadians themselves are using them as investment vehicles as opposed to living spaces for families, well, who do you think is living in those properties? The families that are renting them. Now, I'm not to suggest that no investors have, or the investors have not been at fault for any of what's going on right now, but the informed investors are not the problem at all. And for our Prime Minister to come out and blame him for that, but not only that, but also to suggest that the reason for bidding is to do with specifically investors, when we could probably argue that bidding could have a lot more to do with the fact that there's not enough freaking supply in the marketplace. So, more than that, let's continue on. I mean, the narrative of our overall governments between the federal government and the provincial government is not only uninformed, it's pandering. It's pandering specifically to the lower middle class family, which if you're lower middle class, this is not against you, but this is just to suggest that it is pandering and it is not going to benefit you in the long run because it's actually going to hurt the market for a variety of reasons. Well, let's talk about that. So what happens if real estate investors say, nah, I'm done. I'm not doing this anymore. I don't want to be part of this market. I'm sick of the taxes. I'm sick of all this. I'm going to bring my money somewhere else. Now, there's about 4 different things plus that could happen if real estate investors move on from our country. And now we've already seen some real estate investors pull out, and we've seen some of the repercussions from that, mostly due to interest rates. But with this capital gains tax, I'll be curious to see if we see any more in the next month and a half. Now, the first problem is we're going to have fewer rental homes. Over 5 million Canadians live in investor-owned properties. Predominantly, and most of them, are non-purpose built rentals. This means that most Canadians live in properties that could have been owned by a owner-occupier. Which on one hand, someone would say, well, that's really negative because I could own that property. But the flip side to that is most people that are renting could go buy. They have the opportunity to go buy, but they choose not to. Not everyone. Some people are trying to and they want to be able to, but most people choose to rent in these situations. So if we suggest that we're going to see a whole variety of investors pull out of these homes, guess what? Fewer rental homes, fewer opportunities, and a much more inferior rental stock, if you will, which leads us to number 2, which is inferior rental opportunities. Without any investors, many of the properties are going to be seen as affordable housing. There's going to be a decline in property management or property maintenance, as we've seen in other countries. And overall, there's going to be a substantially lower overall quality of housing. Now, this isn't to say, again, renting is bad, but the type of properties that we have available right now, which is very minimal, aren't going to be very good, especially when we think about the speed at which the government has to build homes. The third thing is there's going to be a substantial amount less in the way of liquidity. Now, if you think about the less activity for investors, think about this. Less money in the marketplace equals less money in the economy. So this could not only slow down sales, which could affect the market and could lead to higher downturns in prices, which some people, the people who don't own, think that's great. Yes, let prices collapse. But anybody who owns real estate, you don't want to see that happen. So if you are trying to get into the marketplace, yes, you'd like to see prices come down and soften so you can get in. And I can totally appreciate that as an investor. I would love to see prices soften so I could buy more investment properties. But at the end of the day, that doesn't work out well for the vast majority of Canadians who have purchased and own real estate, as it's a destabilization of their overall assets. So that would be bad. But in addition to that, if people are going to take their money out of the marketplace, they're probably going to move it into some of the other markets and maybe even consider other countries like we talked about earlier in this episode. I talked about. A last one would be just like the overall economic growth. So investors themselves, where do you think that developers get the deposits from? Investors, pre-sales, these types of things. Not only will they be slower to turn around, they won't build as much because they won't have a desire to do so, which means less economic growth, less demand for construction, building materials, labor, creating jobs, and boosting the economy. If these guys aren't working, then those jobs, those corner stores, those stores, those businesses, whatever, they're not operating at their capacity because they don't have the ability to do so because they're not receiving the income. So it all works in a roundabout way. The truth of the matter is we had a pretty darn good synergy 10 years ago from 2010 to 2015. And yes, property values were always going to go up when our country became more interesting, I guess, as you want to put it, where there was more people coming to our country than ever before. But if we think back about some of the issues that we had, we didn't have an issue with supply. We had other issues, and there were still investors back then. There wasn't a lack of real estate investors. Maybe it was that it was more of an informed investor back then, and we had much less of those speculators. Now, I'm not a fan of speculating investors. Those are people who basically don't do any due diligence. They put money down, and they can be overly emotional, which can cause a variety of challenges in the overall marketplace. But the truth of the matter is, that's just not a massive group of people. And really, if we think about the overall context of where things are going, the research consistently proves that investors do worsen home affordability unless supply restrictions are loosed and demand is balanced. That is the problem that we're having right now, and there is no other way to really hide from this. It is simply a government overstep, essentially rigging the market against real estate investors and suggesting that Canadian consumers are bad if they invest in real estate, but good if they buy their first homes. Bad if you use real estate as an investment, but good otherwise. It's pure insanity in my perspective, and it's just another excuse essentially to pick people against one side or the other and get more and more and more and more attacks. So what does this mean for real estate investing as an option? I think the first thing right off the bat is that if you are someone who is a real estate investor or wants to be a real estate investor, if you heard a couple things that I said, if the market is quote unquote going to soften, if there are a bunch of people jumping out of the market, well, first things first, there's going to be a great opportunity for you. The second thing is it's a reminder for you to keep a really, really good nest egg for your investments. If things go sideways, if there's a rate increase, if there's a new rule put into place, or your tenant doesn't pay their rent for 3 to 6 months, set that money aside. The other factor is that you need to be agile. You need to be agile when it comes to investing in real estate and always look out for new and unique opportunities, but do your due diligence. Way too many people fall for the quick fix and the quick money. And in real estate investing, the truth of the matter is always going to be a long-term play. A few other factors to consider is even though investing in real estate from a lending perspective keeps getting tighter, you've got people like me out there who actually spend time and energy trying to make sure to understand how to keep things not only above board, which is exceptionally important, but also how to use the guidelines to benefit the client who is looking to diversify to buy their first investment or second investment property. I think the truth of the matter is now more than ever, our market is going to need investors. They are going to need real estate investors, and what it's going to do is it's going to weed out those who are not committed, and it's going to weed out those who are speculating and aren't actually doing it for the right reasons. Barring that, our market will turn into a nation of quote unquote renters who live in boxes, and for all intents and purposes, the wealthy people are the only ones who own homes, which ultimately could happen. And the truth of the matter is there's other people out there who suggest the same thing as I do. Now, at the end of the day, if you're still interested in getting into real estate investing after listening to this, feel free to click that link in the comments or in the bio, and I'll send you a copy of my pro forma analysis and a real estate investing handbook. It's about 72 pages to explain how to get started investing in real estate if it's something you're interested in. If you're still listening to this and you found this interesting, leave some comments below. I'd love to hear your feedback. And if you're listening to the podcast, please give us a rating and share this out with a friend or family member who could benefit. I'd also love to hear from you personally. You can find me on Instagram at Flow Mortgage Co. or at The Mortgage Pug on either one of those places. Thanks for listening, guys. We'll see you on the next one. That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.